Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock, including news. The IMF leadership is looking at the world through French eyes. But first, markets were quiet over the weekend with the Americans on their July 4 holiday. They will be feeling pretty good, given the strong rebound their economy seems to be getting. In fact, the non-farm payrolls report out at the end of last week showed their economy added 2.2 million jobs in the past year, more than half of them at higher than average wage. The unemployment rate fell from 7.8% to 6.3% over the same period. By any measure, that is progress, and quite a bit more progress than is occurring in other large economies. In fact, just the 12-month growth in the ranks of the American employed is almost the same as the entire New Zealand employed workforce. But that progress is still not enough for the IMF to raise their forecast for global growth, and they are hinting at another cut in their estimates. And Europe is settling in for a very long slog of very low interest rates as the ECB frets that governments there seem unable to lift their game without piling on more debt. France especially seems intent at blaming others. And China is doing something only China can do, using its monetary policy authorities to action some fiscal stimulus. And also loosened its exchange rate controls over the weekend in retail markets. Banks can now set their own exchange rates for the yuan against the dollar in over-the-counter transactions, another step towards freeing the exchange rate from government control. Previously, banks had to offer rates within 3% of the official peg. The interbank rate did not get the same freedom, however. The Dow Jones Industrial Average, the US stock index made up of 30 of the world's biggest firms, closed above 17,000 for the first time on Friday, and the much broader S&P 500 index also closed at a record high, less than 15 points from the 2,000 level. US markets seem to be riding an earnings wave, but it is doubtful the exuberance can last. However, interest rates continue to rise in the US, with the benchmark US Treasury 10-year bond yield ending last week at 2.64%. Gold and oil moved very little over the weekend, although the oil price did slip below $104 a barrel. We start the week with the New Zealand dollar at 87.3 US cents, 93.4 Aussie cents, and the TWI is now at 81.4. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.